Welcome to Lykken on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lykken, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lykken on Lending. Now your host, David Lykken.
Listeners, there's some breaking news, and we want to bring you a news flash on what is happening right now. I've asked David Pahwa and, of course, Pavan Agarwal to join us to talk about this. So, Pavan, kick it off.
Well, I'm sure everyone's heard about the stock crash yesterday with our friends in Detroit, and you can guess which trend.
UWM, yep.
When we were reading the statements that were issued formally by the company at the earnings report, and there's so many, those statements lead to more questions than answers.
Right.
And the biggest issue is this, $500 million hedging loss, of $400 million hedging loss, and is blamed on the two harbor deals falling apart. David, what's your perspective on hedging? So what do you give me your opinion? What do you think of it, and then I'll opine on your opinion.
Well, definitely. I looked at the time when the hedge was in place, right? So, if we look at just the quarter, that it was second quarter earnings. So April 1, we know the rates were, I'm just going to talk about the 10-year yield because everybody understands. So the yields were at 4.26. They went up towards the end of the quarter to 4.36. So essentially, the yields went up. Now we know, there's a very large amount of hedge that's been put in place based on the information provided, and the loss was enormous. But of course, it does leave some questions unanswered. Explanation that was provided seems incomplete. So definitely, we need more information of how this all happened.
Yeah, it's terribly inconsistent because the story is that we put on a hedge because of the Two Harbors acquisition. We put on a big servicing hedge, right? So if you put on a servicing hedge, the servicing hedge is designed to protect you in the event rates fall and your servicing portfolio runs off too fast, right? That's the whole point of a servicing hedge. So that means you're betting the servicing hedge is a bet that rates would fall, or protection against the movement of rates falling. So why would you do that on a trade that hasn't closed? Number one, right? Fundamentals of trading is unless it's certain, unless it's closed, you don't place a hedge because it's a responsibility of the other party to hedge until it closes, and then you hedge. Okay, that's number one. Number two, they weren't just buying servicing; they were buying a company. They were buying Two Harbors, a very sophisticated enterprise. So that means Two Harbors already had it hedged, and they were buying the whole company, lock, stock, and barrel with the hedges and everything else, all the assets, liabilities, everything, right? So if Two Harbors already had it hedged, presumably they would have already had it hedged. Why do you not put another hedge on? Right? If you hedge a hedge, right, that means you're gambling. They doubled down on the Two Harbors hedge. That makes it basically you're saying either A, you don't trust the Two Harbors hedging mechanism, or B, in your diligence of Two Harbors, you said, they're hedging. They didn't hedge it or their hedging is bad. Okay, but then you would discount that in the price, right? I mean, the best hedge in that situation, if Two Harbors wasn't hedged, didn't hedge your portfolio, the best hedge you as a buyer is, okay, I'm gonna adjust that in the price, right? I'll let my price float with the market, right? But it's very unlikely that Two Harbors was not hedged. And then why, if you're buying the whole company, why are you putting a hedge on? And that means you're really just taking a bet that interest rates are going to fall. You're taking a very, very big bet that interest rates are going to fall. And if we all remember, like in the March, April time period, it looked like rates are going to fall forever, right? This is before the Iran war started, right? And we were all ecstatic. We were thinking that, hey, the 10 years headed to, I think at one point, didn't it touch like 390 something, 399 in the March time period?
Yeah, dip below
It,
4.
it did in February, yes. So
Yeah, right.
so the war started February end, right? And
Right.
and by the time one month passed, I mean there was a very high likelihood by the end of March that the rates are going to start falling again because there
Right.
was some conversations coming out. I mean, information coming out of the White House that there's probably going to be an agreement after 1 month of bombing. So
Right.
I think that's the time towards the end of March when probably
Well, we
the hedge
don't.
was taken.
Well, we don't know when it was. It could have been taken in February, right? It could have been taken in February, and then they're reporting the loss this quarter. We don't know when it was taken. I mean, we don't know how long they've been negotiating with two harbors, right? So, right. So, I mean, there was a time because we knew Warsh was coming in, and he's a dove, he's an extreme dove, and we knew that, and rates would look like inflation was under control, and rates were going to keep falling, right? And then the Iran war happened. No one expected that war to happen the way it did, and the consequences it had on the global markets, right? Yeah. That's the whole point of hedging. The whole point of hedging is risks and information you don't know, so you want to protect that, right? So,
Right.
if you were to ask me in February, March, I would have said rates are heading, like, we're going to be in the mid 3s to low 3s in the 10-year Treasury, right? It was a very tempting bet to take, right?
It was.
Like, yeah, right. I think a lot of people in this industry were like, okay, rates are going to keep falling. This is going to be great, right? But that's not the way you run a disciplined capital markets desk, right? You don't bet when you're running capital markets. It's not Vegas. I'm actually doing this podcast from Vegas right now, so it's very appropriate. I'm at
You're getting ready to fly out, but it's very appropriate. And that's what it looks like. It sounds like that was happening.
Yeah. Your cap markets desk is not your personal casino. Sorry.
Thank God we got David Pahwa running your capital market desk. He doesn't take risks.
Well, David's smart because he just lets Angel AI figure it out.
Yeah. Well, that's a whole nother topic about how you are using the AI to be able to do better job of hedging in a wiser way with greater insights. With less. So I'd love to get into that at some point in time. We have to have David back on.
Yeah, and we wrote a very sophisticated AI model for our bond position trading, and our hedging, and it does all the work. We have very little staff in our cap markets trading locks. All the locks are automated. All of the locks are through Angel AI. All the electronic trading is done through Angel AI, right? And it's literally the people that there are just overseeing and double checking. Because it's billions of dollars at stake. You still have to have a human oversight. That's the circuit breakers. So,
right. Yep.
Right.
Yep.
And the conversation. David and I always have the conversation. Hey, this is not. So sometimes I'm the risk taker. I'm the one who says, David, why don't we go long or short on this position? I think the market is going to go this way. David's like, nope, can't do that.
Nope. Yeah. A discipline that talks to the discipline of this, and it just amazes me that there's anyone playing the market in any way, shape, or form. Again, we don't have total insight, like you said. We have more questions than we have answers as a result of this. When you see headlines like this, David, and I'm looking at the markets right now, man, we had a kind of a wild day so far today. It's been pretty wild. You don't sweat these kind of times.
Oh, absolutely not, Angel. I'm right now sitting at the Portland airport. So, but I know at the back, Angel AI and my team is actually watching all of it. So, of course, the market, the yields are lower today because of the jobs report that came out that we had a reduction in the jobs creation. So, that's been helping the markets today after a couple of days of rates going up. So, good place to be in today.
I'll tell you a reason, David, why Pahwa is smiling right now. There's an old adage in Wall Street, right? If the market isn't changing, you're not making any money.
Right. When he looks at kind of volatility, he's having a very good day.
It doesn't matter if it's a bull market or a bear market. All that matters is that it's moving.
Yeah.
Right? As long as the market is moving, the smart money makes money.
Smart money makes money, and that's what Angel AI helps you be very, very smart.
You know what?
So,
And David, it's interesting to add that over the last, while the rates were all going up, right, over the last 5 to 10 days, I mean, Sunwest has had one of the best submissions in the last 3 months.
wow.
That speaks a lot. I mean, if it doesn't matter what the rates are doing. Businesses out there, people need to have confidence. People have confidence in Angel AI. That's what is getting us the business.
Yeah, and it's like our brokers, they're going to Angel, they're getting an approval. Like they can build such strong relationships with their realtors because they're getting approvals on the spot, like warranted approvals, right?
Yeah.
Not a pre-approval, but a real approval. And you're getting it in a couple of minutes, and okay, right? This will fund, right?
Yeah. The warranted part is the part that I think is probably one of the most amazing parts of this whole thing and the benefits of working with an Angel AI.
Yeah.
Let's go back to the headlines for a minute. Is either of you want to get out and talk about the future of UWM and how this could shift the market share a bit when it comes to
yeah, look, I'm going to stick to what's in the news, what's publicly available data, right? And they're a great competitor. I mean, Matt Ishbia is an amazing, smart guy.
Very smart guy.
So I take no pleasure in seeing anyone, especially his family's money, right, having trouble. So and I always respect a strong competitor. So it's a sad thing that's happening, right? But when you look at the data, is what was reported is that Oaktree put in 1.5 billion.
Yeah.
And the Matt put in whatever 200 million, and then they're gonna issue more stock that's going to cause 50% dilution, further dilution. So if Oaktree put in 1.5 billion when the total market cap of UWM was roughly $1 billion, a little over $1 billion, right? So they basically bought the company.
Yeah, effectively, they bought the company.
I mean, they paid a premium for it, right? But at the end of the day, I don't, the company, the stocks could be trading below book. I don't know what's on the books. I haven't studied it. But if I'm Oaktree, if I was doing that trade, I'd be looking at the assets in the book, and I'd be saying, you know what, this is trading below assets, but I suspect it was probably trading below asset. And I say, okay, at this price, I bought the assets at a discount.
Yeah.
Right. Because because the balance sheet of a mortgage company is what? It's going to be unsold loans, inventory. It's going to be MSRs, and it's going to be scratch and debt. Right. And maybe some REOs, real estate, things like that. Right. That's the hard assets on a mortgage company book. And it doesn't take a genius to go through that. Add that up. Right. You have if you dig through the financial, you can add that up. You can say, okay, they have X amount, and of course cash, right? And you have X amount of assets, right? And I'm going to give you a price that's that where I'm getting those assets at a discount.
Mm-hmm.
And then you got the whole company.
Yeah.
Right? So I think Oaktree are really, really smart boys. Very successful fund, very smart. They know what they're doing, and they make money buying things at a discount. Right? They're the geniuses at buy low, sell high.
Yep, they are.
Right? They know how to swoop and buy at the right time. So if Oaktree bought, I know the bankers at Oaktree. If they're buying something, they're getting it at a bargain, better than a bargain. They're buying something, they're usually getting it at a steal. So they must have pulled off a great deal.
Yeah. So as far as market shift, do you think this is going to cause? I mean, UWM has been a very aggressive player in this. You have a wholesale operation.
Yeah.
Rockets.
Yeah, that's a good question. David, what are you seeing on pricing? You look at competitor pricing all of the time.
Yeah, for sure. I mean, over the last, I would say it's not a recent, a phenomena that I see in the last couple of days or something, but over the last 2 months, I've been noticing that, definitely UWM used to be a very competitive out there with us in the market, but the competition, they're backed off in terms of competition. So
Yeah.
our,
How much
as
price
far as
movement
I
are
compare
you
with ourselves.
when you look at the rate shifter and other pricing engines? How much movement have you seen,
Yeah,
David?
I've seen about I would say about 50 basis points. I mean, they were
50.
one of the aggressive players when it used to come to competing with anybody, but I don't, it definitely
Uh,
about 50 to 70 basis points behind right now.
okay, so that's significant.
That is significant. Yeah, that is
Yeah.
very significant. I think this is going to have an impact on the competitive landscape. And
Right.
again, encourage our listeners to go. If you're not checked out Angel AI and the advantages, this is one of the reasons you can just hear when you talk to Pavan, you talk to how David is hedging this. They're not risk takers. They play this game. And what you want to be is partnered brokers, lenders with a company that has a consistent, demonstrated policy, but now aided by AI. And that's what's going on here. Great story. I love the fact that you two were able to
One
join up.
last point.
Yeah.
On risk taking, one last point I'd like to just add, and I'm gonna make a reference to your favorite person, Dirty Harry.
Yeah. I love your dad. Your dad, Dirty Harry.
Yeah, he gave me one piece of advice a long time ago. He says there's only two ways mortgage companies fail.
Yes.
One is risk taking in capital markets.
Right.
The capital markets, their trading desk becomes a casino. Two is bad underwriting. He says if you look at every mortgage company that's ever failed, it's one of those two things.
Right.
And that's as simple as that. Just maintain discipline in both areas. I mean, and in our case, both of them we've solved just through technology. Let the AI do it.
Right.
And-
Appreciate it. I love you both being here. Thank you so much. We pulled this off, folks. I'm taking the day off. I'm out working on my dock and boathouse down here, and I'm looking at what's going on and talking to Pavan. I said, he said, let's do a quick podcast. I said, oh, good. Can we? And you brought on David Pahwa. So David Pahwa, it's so good to see you, friend. I have so much respect for how you operate and just what a genuinely wonderful human being you are. So it's great to see you on here. We get Jennifer on here every once in a while. We got to get you back and giving us some. And I know you're so humble. You say, no, I don't need to be on the camera. But would love to get your perspective, especially as you see how the AI factor of Angel AI is playing into what you're doing. I think that's a story that we need to get told.
Absolutely. We'll definitely have a separate session for that. For sure.
All right.
Thank you very much for having me today.
You bet. Safe travels to both of you as you're heading wherever you're heading to this week. Pavan, you live in an airplane. I don't know how you do it, but anyway, safe travels home. So folks, that wraps up this podcast. Thank you so much. This has been sponsored by Angel AI. Check them out at angelai.com. You can learn a lot about them or start using it for free. That's right. The word free at askangel.ai. Thank you.
You've been listening to Lykken on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lykken on Lending.